Hey everybody, welcome back to Ryan Makes Sense. Today we're going to be looking at a Tesla scanner. So I created a scanner that looked at Tesla before it ran 1000%. We're going to review all of the stocks that are showing up that match Tesla's same financial parameters before Tesla ran 1000%. So the goal of this obviously is to see um, if there's some gems, some gorgeous looking stocks that we can potentially find. We're going to be using Thinkorswim as well. You know me, I love my Thinkorswim. And we'll also look at institutional buying for all these stocks. So let me stop jibber jabbering. We're going to go to our screener over here. This is also available on the FinViz free version, by the way. I was able to get to seven figures using the FinViz free version. If you watched one of my latest videos, I look at how we catalog stocks, set alerts, make notes, chart. And we want to make sure that there is a story with the business and a compelling story with the technicals. You combine those two right here, watch, like that, like fingers crossed, and it just creates a spiral up. And yeah. So again, the company, the CEO, there's got to be a lot of synergies that build into a growing stock price. It's not just, as easy as crossing your fingers. So you can see my screen. We're going to go to Room Like Tesla. And I do have older videos where you can capture and look at all of my different scanners. So for this, Tesla was a $2 billion market cap company. Quick ratio was over one. Institutionals were adding institutional investors. The shares float was under 100 million. Earnings per share growth next year over 30%, gross margins over 30%, and average volume over 1 million. So this yields us 11 stocks. So what we're going to do is we're just going to go ahead and open the first half. And in this case, we'll just do the first six, and then we'll look at the next five. There's going to be some automatic disqualifiers, and that's not to ruffle your feathers, make you upset. I understand people, when you invest in companies, it makes you emotional and you're very, very strong headed. I'll post a video about a biotech company and I will get reamed in the comments, or people will reach out to me and be like, dude, you're an idiot. I'm just saying, if someone were to come up to you with a folder or a portfolio and say, hey, here's my business, we're going to solve world hunger, we spend $500 million, but we make 10,000. It's like, dude, that's not a recipe for success. Come back when you've got something viable. No offense to you or a company, but we've got to watch out for our six. So, yeah, the first one we're going to look at is Asana, ticker symbol ASAN. Um, $13 stock. We like to look at La Bigger Picture first. Um, so the stock has decreased by 10x. Okay, so there's a few things we can gather just looking at this. Has the company improved since 2021? Because look here, the height was around 2022. Has the company improved? That's going to be a big determinant on if this company is viable. Um, so I mean, 40. We're looking at the RSI, the MACD, the money flow. The money flow, you can see it's going down. We'll go ahead and let Asana right here, just so we have a frame of reference in terms of what institutions are doing. So to answer my question, is the company doing better than they were in 2021? Yes, almost three times as better. What about 2022 when they were at all-time highs at 140? Yes, not quite double, but several hundred million dollars better. This is actually perfect. We want to see this going this way up and to the right. Not a fan of this. They are adding shares to the pool. So we see shares outstanding right here of 224 million and shares outstanding here of 139 million. Uh, If this is true, there is quite a bit of natural and organic accumulation of shareholders buying the stock. Some quick analysis. They are not profitable. They have good quick ratio. They do have debt, but they are addressing it. You can see 0.87 here to 0.80. EPS, I mean, sorry, sales past 5 years positive, EPS past 5 years negative. Um, okay. So not a bad company. We're going to kind of turbo this because I want to get through tons of stocks. Well, 11. And typically we review one at a time. So our market cap here is 3,100,000,000. Income is negative 259,280,000. And sales is 672,540,000. Okay. And cash and debt, we don't know yet. So we're gonna go down and take a sneak peek. Okay, Q1 this year they had 171 million in sales. Q1 last year 151. That's a 21 million increase, and gross profit increased as well. So they're becoming efficient. Q2 this year 172 million compared to 152 million. $20 million increase. Gross profit is higher, so it's coming to becoming more efficient. It looks like. Gross margin 89%. Get out of here. Get out of here. Ugh, get out of here. 89%, 89%, 90%. That's pretty insane. I'm not seeing any red flags really down here. The CFO likes to sell his stock, but he's holding out. I mean, he's still. We see a lot of sales going on, but look at all the options he's getting here, and his overall share count is remaining above 1.068 million. We can see the pres. Oh, look at these juicy CEO buys. You gotta love this. 1750 average, 47 million shares. Look at this. This guy was dumping millions, potentially hundreds of millions, and the stock price is lower. So I'm feeling like I'm getting a good discount if I were to start buying today. Back to our calculation. Cash 524,290,000. Debt 256,490,000. All right, and really quickly, total assets 978 million. Total liabilities net 658 million. Assets dwarf liabilities 1.4 to 1. So for every liability, they have 1.4 assets basically. They're on track to get to 1 billion in assets, likely before 2025. So good for them. Back on up. So we do have 139,240,000 shares outstanding with a potential stock price of $27.15. Current price is $13.58. Target price $16.55. We see some $20 targets right here. So I gotta say, I think we are undervalued here. Let's go ahead and load this on Thinkorswim really quick. ASAN. Ooh, I've charted this one out. Okay, all right. I've charted this one out before. We'll come back here and we'll go over that. Okay, so institutions, I mean, analyst price targets are saying this deserves to be higher. My stock price calculation says it deserves to be higher. I mean, they're kicking butt right here. They're kicking butt right here. And I think this is kicking butt. Shares outstanding is down to 139 million, not 224. So I think we're kicking butt. I think institutions own more than 28%, and institutions currently own 48%. Ooh, just got goosebumps. I love when I get goosebumps. Last time it was this high was April 2022. Literally April of 21 to April of 22. I just want to go back up. April of 2021 to April of 2020. Wow, we're almost at the same institutional level that was here during this major run up. Ooh, baby. Ooh. I'm digging that. I think I really, really like that. So I like this. I like this. And just for the record, so FinViz does show older data. That's a fact. Institutions, you can see 28% here. Latest data is 48%. And we can see that I'm recording this on the 20th of August. And we can see that we have SEC forms that have come in today. So, absolutely gorgeous stock. I'm just gonna have to make a note for myself because I really do like this, and I think this is doing better than it was in 2021. I mean, it's doing the best it ever has. So that's fantastic. Okay, so this one looks good to go. This took about 10 minutes. We have 5 other stocks to get through. I'll make this a two-part video, so this will be part one. Okay. I like this one. We're going to go to Thinkorswim really quick. All right. So this is a Fibonacci arc from our all-time high to our all-time low, which isn't correct because I came here. I'm guessing I projected the stock price was going to get down here. So I'm going to activate our all-time low is actually 11.29 right there. Just going to make sure 145.79, 11.29. Okay. So 10 out of 10 support test, 10 out of 10 support, almost 10 out of 10 resistance, 10 out of 10 resistance. So I think we've got about another year before we start to see some action on this. But let's just draw this out because I'm truly, madly, deeply interested in this. Truly, madly, deeply do. Okay, so right there. And what if I went right there? That's a little aggressive. That's a little aggressive. Yeah, okay. So I chose this channel because we can see great test of resistance, 100, 10 out of 10 support, 10 out of 10 support, 10 out of 10 support, great test, 100% beautiful resistance. I'm sorry, support, 100% beautiful resistance, 10 out of 10 support tests right here, test, test, test of resistance, falls through, great support, almost perfect resistance, tries to break up, perfect test, tries to break up, and is this candle almost right there? So it's going to be in this downward channel. Once we break this, I'm guessing it's probably going to be maybe over here, 2025. This is something I will start loading, not you. I would for my own strategy because once my ownership of the stock passes 1 year, my long-term capital gains goes into a smaller bracket. So I get taxed less for holding it for a year. So that's gorgeous. And if we're looking at supports, beautiful double bottom right here, boom and boom. We have really good resistance right there. Yeah, so right here is what we call our apex, where we have our resistance and our resistance converging there. Yeah, this is something I would get into. So Asan, you passed the test. Now we're moving on to ASPEN, Aspen. Ticker symbol ASPN. And we're going to look at the bigger picture. Don't forget to drink your water. Holy cow. This got down to $5 and is now at $30. I mean, this is with the bulls. Look at this strength, momentum, money flow, relative momentum. This is with the bulls all day. This is extremely beautiful. This is extremely beautiful. 76. I mean, I don't like when they increase the pool. They are profitable barely. What do they do? Building products. Okay. They're profitable barely. They have good quick ratio, little debt, great gross margins, sales and EPS positive. They are resilient. Insiders looks like they're selling off. We're gonna go ahead and check that out. Um, this looks really good in my opinion. Okay, so the market cap is 2,379,000,000. Income of 1,390,000. And sales of 357,250,000. All right, let's go on down, baby, down, baby, down, baby. Really quickly, Q1 this year, 94 million. Q1 last year, 45 million, so it's more than a double. Q2 this year, 117. Q2 last year, 48, more than a double. Gross profit, oh yeah, much higher. Much, much higher. Wow, they really turned the corner there. Okay, so it said instant ciders were selling a lot. This is good. Um, who's selling? So we have a 55,000 sell here, but we got options, 20,000 sell, 28,000 options. Wood River Capital, okay. Kathleen Cool, 4,400, 4,400. Donald Young, about 400 and some thousand shares, and we can see those wash out there. So, more water, I'm thirsty. No red flags. Back to the balance sheet. I don't know why I'm so thirsty. All right. Looking at our cash, baby. Cash, baby. 91,780,000. In debt, it was not much debt. 147,370,000. All right. So total assets 748 million. Total liabilities 230. Assets dwarf liabilities 3-1, which is fantastic. And this being a building and infrastructure company, they are up there in terms of gross margins. And this stock has really freaking reversed. Like, holy cow. So back to our potential share price. So we have shares outstanding of 76,500,000. $34 stock trading at $30. Analysts have it at 32.73. I mean, this is pretty nuts. It's hot. And institutions and hedge funds. Let's load this. While we do that, let's see what we got here. ASPN. Wow. So I've charted this one out. Why didn't I buy? Come on. Okay. Holy cow. All right. We're seeing some resistance here around $30, which does fit in pretty well with this resistance right here. So you can see perfect resistance, perfect support, falls through, perfect resistance test. And again, perfect resistance, tries to break up, falls down. It's trying to break up here, so we're gonna see. I mean, this is hot. And we got extend to the right. It's perfect channel. Man. Okay. Institutions own 93%. That is old data. New data suggests and says that they actually own, excuse me, 106%. So not bad. We can see it's actually kind of going down over the last 6 quarters here. I might wait on this one, honestly. And the only reason is it's gone up so much from like $5 to over $30. And I'm not saying the move is not warranted. I'm just saying it's hotter than hot. I think if it could, and we didn't get our, if it could, if it this month, when's the next earnings? Earnings passed. If we could have broken up above here, $39 area, and then seen a retraction, that would have been great. I only say that because it would be a cup and handle almost, but we have a left side of the cup that is higher than the right side of the cup at the moment. However, it is still there's still some time in August for this candle to break higher. So this is a wait and see for me. I'm gonna set an alert if the price goes below. Yes, crosses below. Yo. Okay. So I'll get a text and it'll let me know. So ASPN going to be on the sidelines for that. Here's my beautiful background if you guys want to see it. Beautiful. All right. Okay. So ASPN, thank you. We're now moving on to BRZE. Let's get this loading. BRZE. Braze. I have not charted this one before. All right. They're a software company. All right. Fancy. Okay. Nice candle here. Actually, no. I would say this is a nice doji candle if there was more buying than selling for the month of August. There is still time, so it's a little early. Strength kind of looks like it's getting ready to go with the bulls. Momentum's kind of pitter-pattering out. Again, do they have earnings soon? They do have earnings August or September 5th, so the earnings are coming up. Money flow going down, but we do know FinViz does have older data, relative momentum going down. Okay. So let's, ooh, look at that. Beautiful, 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 beautiful. Sales 471 for 2024, trailing 12 months. However, we're at 505 million, so we are on track to do very well for 2024. Okay, looking at some parameters at a high level, they are not profitable. They have good cash. They have some debt. They're paying it down. EPS negative, sales positive over the past 5 years, somewhat resilient. 68% gross margins, that is incredible. Institutions own a bit. They're buying some, it looks like. And it's a low float stock. So let's run the numbers. I'm actually quite excited about Braze. Okay. Braze. Okay, market cap is 4,430,000,000. Good for them. Income is negative 126,350,000. And sales is 505,480,000. Let's go down to the cash. Okay. Okay, just really quick. Q1 this year, they brought in 130 million. We don't have Q1 last year. Q2, 135. Q2 last year, 101. Gross profits up. They did spend a little bit. They spent $12 million more than they did last year, but that also made them 34 million more. So that's pretty good. A lot of selling here. Not many options. CEO selling at 57. What? I just need to see what the stock's at now. 43. I thought the stock was lower for some reason. Um, kind of hesitant. And I only say that because I would like to see a potential cup and handle scenario, but it's kind of like we've hit all-time high, low, lower high, lower low, high right here, higher low. Mm, I would just like to see the CEO buying. That's basically what I'm saying there. A lot of selling here. Again, if the price was extremely cheap, maybe they would be buying. But I think then again, on the flip side, if the price is too high, they would probably be selling, which is what we're seeing. So, is this going to go lower? We're going to find out. All right, let's see the cash now. Cash 487,130,000. Debt 72,170,000. Not bad. Cash position almost at all-time high. Total assets 816 million, total liabilities 379. So assets dwarf liabilities at least 2 to 1. So every liability they have two assets. Good for them. Going back up, going back up. So now we're going to take this and divide it by 73,040,000. $71 stock. Analysts have a $61 target. Oppenheimer had 75 at one point. BTIG Research has it at 75. Pretty close. All right. What are institutions and hedge funds doing? It says that institutions and hedge funds own 59%. However, my calculation, analyst calculation, says this stock deserves to be higher. If that is the case, maybe institutions are holding more than 59%. They are holding 96%. And we are at an all-time high in terms of institutional ownership and hedge fund ownership. That is a golf clap or a standing ovation because look at what FinViz is showing. Money flow down. However, look, this says otherwise. So, yeah, we're seeing a bit of conviction here. Cadian sold 69%, Battery sold 19%, William Magnuson added 7%, Jonathan Hyman sold 13%, Iconic sold 23%, Vanguard added 82%, crazy. Morgan Stanley sold 1.7, and then BlackRock added 4 million shares. Wow. Wow. All right. What's Lago Vista? I'm just gonna check that out sometime. Okay. Institutions are saying the stock deserves to be higher. We're gonna do a couple things here, baby. I want to see if this. Okay, this is great. So, what I wanted to do here was to determine the level of confidence and how these candles are reacting to this Fibonacci arc. I would say this is a 10 out of 10 support test here. This candle, it tested down here, good support bounce, fall through, perfect resistance here, 10 out of 10, great test, falls through, great support here, great support resist, 10 out of 10 resistance here, tries to break through, can't, perfect support. Once we break out of this Fibonacci cycle, I think we have some good things coming. In fact, I think we could see an Elliott wave. Do we have an Elliott wave on here? A lot of Fibonacci GAN fans. So what I think we could see happen is this. So that's one. That's two. Stay with me. Stay with me. This is three. Four. Five. A. B. C. D. All right, so that's an Elliott wave, and let me just, if you guys think I'm absolutely bananas, I don't blame you, honestly. But this is exactly what it looks like. It's called the Elliott wave principle. And the strongest move up is always wave three. And if we go back here, we have, can I add text? Yes, I can. So here's our one. Here's our two. Here's our three. Typically, the third leg up, this one right here, this long one, is twice the size of leg one. Typically, Elliott wave theory, there's a lot of different ways you could go about it. So with this potential Elliott wave and the perfect timing of this stock literally breaking out of this Fibonacci arc, I think, and if we go from here, oops, I think we're ready for a move, honestly. 22, and if we go to our all-time high right here, okay. And we're gonna make this all purple. Fantastic. All right. So, kind of coincides with the lines I have. So, absolutely insane. The only reason this is leading me to this craziness is Number one, we're getting out of this Fibonacci arc. Number two, big money, big money, big dollars went from 59% ownership to 96. That's a 47% increase, which is unheard of. And we're at all-time highs right here for institutional and hedge fund ownership. So, yes, this one is definitely on my list. And yeah, absolutely fantastic. Okay, we're at 30 minutes and we've only gotten through two stocks. So I guess this will be a three-part series looking at Tesla stock, scanner, whatever. So if you made it this far, thank you so much for watching. Number two is coming out tomorrow. And then the third video or the fourth or fifth, however many long it takes us to get through all of these, will be coming out in the coming days. Thank you so much for watching. Take care. See you tomorrow.